Good evening, all. Myself, Meera Varghese. I'm a full-time research scholar in the Postgraduate and Research Department of Commerce of Maharaja's College, Ernakulam. I'm doing my research under the guidance of Dr. Makesh KG, Assistant Professor in Government College, Tripunizra. I'm here today with you as a part of Research Scholar webinar series organized by Research Committee of Maharajas and in association with IQAC. The topic for today's presentation is Indian Fintech Sector and Overview. Now, let me share the screen for you. I hope you can see it. In today's world, people have changed their state of mind from cable networks to online networks. And this has changed the world gradually towards adopting the new age technologies. Especially the banking sector is now realizing the comfort of data processing with the help of cutting edge technology such as artificial intelligence, blockchain, and so on. As a result, traditional banking and financial services industries are approaching the fintech companies with a view to providing innovative services to their customers. Welcome all the viewers, my co-scholars, and all the future viewers of this session. I'll be giving you all an insight into Indian fintech sector and overview of this. Why fintech sector has turned fierce in the modern world. Now, what are these fintech companies? Fintech is an industry comprising of companies that use technology to offer financial services. It's a combination of two words, financial services and technology. It is abbreviated as fintech companies, companies that offer financial services using technology. With the development of fintech industry in India, the whole business has experienced a huge change in the manner in which money-related matters are handled. The term fintech was first introduced by a New York banker in 1972. There is no clear-cut definition as to what all companies come under this category. However, the operations under this industry can be categorized as financing, asset management, payments, and other fintechs. Now, which are these fintech companies? To give you more idea about which are the fintech companies in India, this is the list. Some of these might be very familiar to you. If when you switch on your TV or when you see a Google ad or something, when you walk into a shop, you see these names, Paytm, PhonePe. Policy Bazaar often comes in TV advertisements of insurance, lending card, free charge, bill desk. All these might be familiar to all of you. So these are the major fintechs in India. The list doesn't end here. As is written here, there are over 2,174 startups in India. The list just goes on and on. Now, this is a segment-wise total of fintech companies, payments, lending, wealth tech, personal finance management, insurtech, RegTech, and other segments. I hope you can see the numbers in the slide. Now we'll be seeing each of these sub-segments of fintech industry in detail. The first we are going to see is payment fintechs. As the name suggests, these are platforms that help one to make payments online. Some examples of it are Paytm, PhonePe, Simple, etc. Digital payments has been the flag bearer of Indian fintech space. In 2010, India launched its first real-time payment system, that is IMPS, Immediate Payment Settlement, and introduced UPI, Unified Payments Interface, in 2016. In the Indian payment landscape scenario, UPI plays a major role, accounting to 769% in transaction volume, with over 60 plus member banks and several large third parties like Google and WhatsApp offering payments using this UPI platform. UPI is driving the growth of mobile payments at present in India. There are over 375 payment startups in the country. Mobile digital wallets, gateways, point of sales, mobile POS, they all together account for over 50% of the payment startups in India. The digital payment market in India is expected to become a $1 trillion market by 2023. And in that, the mobile payment market is expected to hit $190 billion by 2023 from the present $10 billion according to 2017-18 financial year. Now, these are some of the examples of payment fintechs, which is incorporated in India and rest of the world. Some of these names might be familiar to you. I hope you have heard of Citrus Pay, Cash, Simple, Paytm, PhonePe, etc. If you read into the description, you can see these are smartphone applications that allows paying a merchant from your mobile phone using your credit card or debit card or net banking using one's mobile phone, mobile number or a mobile wallet app, etc. Next, we move on to InsurTech. As the name suggests, InsurTech is a subsegment of fintech industry or fintech companies, and they provide insurance services digitally. The current insurance penetration is not so high in India compared to the global average of 6.5%. The current digital insurance penetration is only 3.69%. So the insurance companies in India will have to work out ways to enter digital platform by shifting from their traditional agent business form into digital channels. They have to also offer new products like micro insurance, unlike the long-term insurance plans. And since the market is highly untapped, there exists a huge opportunity for the fintech startups in this sector, in this subsegment, and to become prominent names in the sector. Next, we move on to lending fintechs. As the name suggests, these financial technology services offering companies, they help you avail loans or credit online. The lending fintech companies, they mainly focus on the unmet demand from Indian MSMEs as well as consumers for credit. Now, why does there exist an unmet demand? Because the traditional banks, they cater to only 25 to 40% of the loan applications. So the rest of the applicants, their demand is unmet. So this is the target of lending fintechs in India. And why do they target such an unmet demand? Because lending fintechs have more access to data compared to traditional banks. They have more access to data like behavior, app-based data, location information, social data, and others. And these new lending models are aiming to increase the threshold limit up by additional 10 to 15%, which is a huge market opportunity for them. Initially, it was a small segment, lending fintechs, but now it has grown to be to a count of 338 lending startups in India. Now, these are some of the examples of lending fintechs: SME Corner, Business to Credit, Vote for Cash, Lending Club, etc. If you read into their description, you can see these are online platforms that enables small and medium enterprises to avail loans. It also, like FairSend, enables peer-to-peer lending and serves as a marketplace for borrowers and lenders. So these are some of the lending fintechs in India. Next, we move on to WealthTech. It is a new class of financial technology companies which are creating digital solutions to transform the investment management industry. The wealth tech industry in India is witnessing the emergence of startups with innovative technological and business models. At present, there are more than 442 startups which are currently active in the wealth tech space, and they offer services like personal finance management, digital brokerage, financial research, and robo-advices. For example, there might be some apps in your phone which help you plan a trip, how much you need to invest at present if you want to go on a trip 1 year later. There might be apps that give you a summary of all your spending, where all your spending is going. There might be apps that give you information about which right investments are to be made, which is the right time, right avenue of investment. Now, all these are services are coming under wealth tech subsegment of fintech. These are some of the examples of wealth fintechs. Finbox, MoneyFrog, Credit Seva, Money Smart, they're all based in India. They enables the customers to track their spending, automate.
Hello, Meera.
Hello, can you hear me?
Yes.
Is the screen visible?
Yeah.
Okay. I hope you can see the examples of wealth tech fintechs. Yeah. So they help you, such applications help you, such platforms help you in tracking the spending of one and automated categorization of your transactions. It helps you in your personal financial management. Next, we move on to RegTech. This is a subset of fintech and refers to the use of new technologies to solve regulatory and compliance requirements more effectively and efficiently. With the advent of global financial crisis, there is a lot of regulations which the banks and financial institutions have to follow. So this has increased the cost of compliance for these institutions substantially, as they need to expand their human resource so that their regulatory compliances, all the requirements are rightly met. So this increases their cost. So here, RegTech emerged as a solution. They are not fully evolved in India, but it is likely to grow further due to growing compliance requirements for banks and financial institutions. At present, there are 53 startups in India in the RegTech space, providing variety of solutions like digital onboarding, fraud prevention, ID authentication, digital signature, etc. I hope the subsegments of fintech industry like payment, lending, insure, regulations, wealth tech, etc. are clear. Now we move on to the ecosystem of a fintech industry. Now, ecosystem refers to who all are the participants that is facilitating this industry directly or indirectly. So as you can see in the image, there is government and regulators, investors, financial institutions, users, startups, universities, and research institutions. These are the players in the fintech ecosystem. The role of government I'll be explaining to you in detail. First, we move on to regulators. Hello?
Yes, Meera, you can continue.
Okay. The regulators of fintech are mainly RBI and SEBI. RBI has been instrumental in enabling the development of fintech sector. The key objective of RBI is to create an environment for unhindered innovations by fintech, expanding the reach of banking services for unbanked population, regulating an efficient electronic payment, and providing alternative options to the customers. So the main regulators of fintech ecosystem are RBI and SEBI. The next component in the ecosystem are investors. Initially, venture capitalists used to be the only investors for such companies in the fintech industry. However, at present, angel investors, banks, and other financial institutions are also coming forward and making huge investments in product development and development of fintech companies. The next component is the financial institutions are actually strategically closest partners to fintech that are discovering core sector talent, and they are also co-developing platforms, products, and solutions, along with besides providing funding and industry exposure. Next component in the ecosystem is startups. Most indispensable part of fintech industry is startups. Evolution of more and more startup is very imperative for a successful fintech ecosystem. The startups are redesigning the financial services with their high-end technological expertise. Another important component in the fintech ecosystem is technology vendors. With complex technologies in place, startups need the backing of expert tech vendors in terms of infrastructure and skills. Another component is universities and research institutions. Now, what is their role? Universities and research institutions have a pool of young talent, tech-savvy talent. So the universities and the research institutions should focus on developing an entrepreneurial skill or entrepreneurial attitude in such young talent pool. Only then the future startups can be promoted from the segment. Next component are the users. Indian customers, both consumers and enterprises, are the users in the fintech ecosystem. They have shown an unexpectedly fast rate of adoption of fintech offerings. So that is about the ecosystem coverage of Indian fintech sector. Now let's see the role of government, the first component in the ecosystem. Let's see the role of government in making India as a progressive fintech nation. India's evolution as a progressive fintech nation is not a miracle. It didn't happen overnight. It happened at the back of executing a 4-point approach, as you can see on the slide now. First was giving everyone in the country an Aadhaar, which is a permanent solution for identity crisis in the country. Secondly, getting everyone a bank account, which is called as financial inclusion. For that, government renamed their program as Prime Minister's Jan Dhan Yojana, intended to give every individual in the country a bank, or bringing everyone under the purview of banking system. And this Yojana has added over 200 million unbanked individuals into the banking sector. The third point initiated by the government was to build scalable platforms like IMPS and Unified Payment Interface to move money. And finally, the crucial role was allowing banks and other financial institutions and fintechs, wealth, insurance, lending, all the subsegments of fintechs, allowing them all the access to all these platforms developed by the government, especially UPI. And they use this platform to innovate. This framework has led India to a fintech revolution. What gave most of the fintech companies a kickstart was demonetization that happened in 2016. Until 2014, the US had maximum number of startups, that is 1,788, not so closely followed by India with a distant 737 fintech startups. But after demonetization, more fintech companies were being incorporated in India since demonetization than any other country, with the exception of China. This was the first time India overtook the United States. The demonetization was the focal point around which companies like Paytm, which was introduced earlier, but it gained prominence after, it became more popular after demonetization. So demonetization proved to be a blessing in disguise for digital transactions in general, and especially those fintech companies that were able to take advantage of demonetization in particular. So let's see some of the government initiatives. Hello?
Yes, Meera, we can hear you.
Let's see some of the government initiatives and support rendered by government. The government of any country is primarily the most important catalyst for success or failure of fintech in a heavily regulated financial industry like what we have in our country. The government of India, along with regulators such as SEBI and RBI, they are aggressively supporting the ambition of Indian economy to become a cashless digital economy and emerge as a strong fintech ecosystem through both funding and promotional initiatives. In the last few years, there have been several exciting innovations in this space. The Startup India initiative, launched by the government in January 2016, includes around $1.5 billion fund for startups. These are some of the initiatives taken by the government. Other initiatives include pro-digitization initiatives, UPI, Aadhaar for eKYC, Bharat QR for QR-based payments, biometric payments using Aadhaar-enabled payment system, e-wallets by 50 plus banks like you have SBI, Yono, Open, etc. And there are certain tax and surcharge relief that have been granted by government, like tax rebates for merchants accepting more than 50% of their transactions digitally. So all these innovations highlight the fact that India is carving out a niche for itself. The present of fintech industry looks good and the future looks promising. So as we know, the present pandemic has also contributed a lot to the growth of fintech companies. The fintech companies should continue to play a very crucial role in a post-COVID-19 world. However, the fintech companies in India must evolve and adapt to a new world to be able to do so. What is the current status? Fintech companies are remodeling our digital payments every day. India is one of the leading fintech startup hubs in the world, followed by UK, Singapore, and Germany. So the fintech companies are gaining, the future of fintech company looks very promising. It is gaining attention across the globe with hubs evolving across. India is the leading hub for fintech startups. One of the major advantage of our country is we have a strong pool of talented tech workforce at present in the country.
Meera?
Yes, yes. Hello,
Yeah,
can you hear
continue.
me?
Yes, continue.
Yes. The fintech companies in India is enabling the entire value chain of the traditional financial institutions to establish better connects with customers and to provide new offerings in the market. So fintech industry has completely revamped the financial technology sector. Integration of many other techniques, integration of many other techniques like blockchain management, cryptocurrency, which is still, hello?
Yes, Meera, we can hear you.
Okay. So using most modern technologies like artificial intelligence, machine learning, blockchain, cryptocurrency, which is still not a niche in India, its future integration will mark a huge success for fintech industry in India and a deep penetration as well. At present, the fintech market in India is valued at 1,920 billion rupees in 2019 and is expected to reach 6,207 billion rupees by 2025, expanding at a compounded annual growth rate of 22% during 2025 period. I hope, hello?
Yes, Meera.
Yes. I hope the topic about fintech industry of India, an overview about it is clear to you. We have been discussing the meaning of fintech and the various sub-segments in the fintech industry and what has government done to promote this industry in our country and what is its current status and what is its future. I hope it is clear to you. With this, I come to the end of the presentation. Thank you for listening patiently to me. Thank you to all the viewers, especially my co-scholars. I would also extend a sincere thanks to our principal, Dr. Matthew George, our vice principal, Dr. Jayamal KV, our beloved HOD, Dr. Suresh VN, my respected guide, Dr. Makesh KG, for his constant support rendered. The research committee coordinator, Dr. Bindu Sharmila ma'am, IQAC coordinator, Santosh Varghese sir, both of them for giving me this opportunity, and all the other guides and faculty in our department. Special thanks to Sridevi for all the technical support and Soumya for hosting the session, and all my co-scholars, Radhika ma'am, Blessy and Honey ma'am, and all the co-scholars in the department. And once again, thank you all. I hope all of you had a fruitful session. Thank you.